Real estate isn't just about buying buildings, it's about building wealth. Whether you're a seasoned investor, an agent, or just getting started, this podcast is here to help you. We're going to be breaking down things like how to analyze deals like a pro and getting top dollar when you sell your property. Get ready as Rene sits down with experts from the industry, people who've been there, done that, and built real wealth. If you're ready to invest smarter, negotiate better, and level up your real estate game, hit subscribe now. Welcome back to Commercial Connections, Investing with Confidence. I'm Brittany, the podcast producer, and today Rene breaks down key strategies that she uses to sell apartments quickly. Selling your property is not just about putting it on the market. It takes smart pricing, strong marketing, and the right presentation to attract the right buyers and close quickly. If you're looking to maximize your property's value, you're going to want to listen to this episode. Now, let's turn it over to Rene.
You are listening to Commercial Connections, Investing with Confidence, episode number 3, How to Sell Your Property for Top Dollar Fast. Hi, I'm Rene Nelson, CCIM. I'm a certified commercial real estate broker, and I'm here today to share with you tips, tricks, and strategies on how to sell your apartment for top dollar fast. So the first thing that I would recommend to people is price it right. I see way too often where sellers are not realistic on what they want for a price. And you really need to use data-driven information, including sold comparable properties, to determine what a property is worth. I'm in the market every single day watching transactions where they're selling, and I stay in tune with what's happening with market cap rates because that tells you what a property is worth. If a property is overvalued, it's going to become stale. It'll set on the market, and then it kind of becomes shop worn where people are afraid that either the property has issues, maybe there's deferred maintenance, or they know that the property is overpriced. Often when you go on national search engines to look for property, you can see how long it's been on the market. And if it's been on the market for 6 months to a year, that probably tells you that the property is overpriced. So I recommend to people to get a pinpoint price evaluation where you supply data to your broker, which would include a rent roll and your last 3 years of income statements or your tax returns, and let the broker do a deep dive analysis for you to tell you what your property would generate in net operating income. And then we apply market cap rates to tell you what the value is. If a property generates $100,000 in net operating income and the market is selling at a 5% cap rate, you take the $100,000 divided by 5% cap rate. That tells you that the property is worth $2 million. If you think your property is worth $3 million, you may get a broker to agree to list it. But if that's not where cap rates are at in your market, your property is going to sit there and become shop worn. You're not doing yourself any service by overpricing a property. So get a pinpoint price evaluation, make sure it's data driven, make sure you understand the sales comparables in the neighborhood and surrounding areas, then you'll know where the property should be priced properly. And maybe it's not the right time to sell for you. Maybe what you should do instead is work on raising your rents or lowering your expenses so that your property generates more net operating income. And maybe next year is the best time to sell. Often I work with buyers and sellers, especially sellers, where sometimes we have to work on their numbers for 2 or 3 years before we can really get their property up to the level where they're ready to sell at the price that they originally wanted. So I really recommend getting pinpoint price and evaluation up front so you'll know where your property falls. The number 2 tip would be create curb appeal and first impressions. If you have a professional property manager, I recommend that you reach out to them, tell them that you're going to put the property on the market. Now, a lot of sellers are fearful of that because they think, oh, I'm afraid my property manager will be mad at me, or they're going to be afraid they're going to lose the account. Most property managers want to keep the account because they already have all the information in their database. They've got all the rent information. And so they want to keep that account and they want that new buyer to come to them. So if you can work cohesively with the property manager and tell them that you're going to put it on the market, what I recommend is talk to your property manager about sprucing up the property. It's amazing what spreading some bark, doing some power washing, and just creating some curb appeal can do for your overall value of your property. And you want your property to be looking spiffy and have a good first impression. So work cohesively with your property manager, and you might have to spend a little money up front. Again, doing little things like maybe planting some flowers, spreading some bark, but creating that curb appeal and that first impression can really make a difference and make your property pop in the eyes of a buyer. The third tip is creating strategic marketing. When I take a listing, I hire a professional photographer, and my team and I spend about a week putting together the marketing material. So we're collecting data. Typically, we look at the demographics. We want to see how many households live within a 1, 3, 5-mile radius. We also look at traffic counts because we want to see the traffic pattern that's going in front of that property. We put that information into our marketing packages because we feel it's important. We work on a national platform for advertising properties. So we want buyers throughout the United States to be able to see the property and realize that it's in a thriving community and how many households are within a 1, 3, 5-mile radius. And also we kind of have an in Eugene because we have the University of Oregon. So that has a built-in renter pool. You'd be amazed at how many students after their first year of living in the dorms want to move out and live on their own, live in an apartment. And then many times they stay after graduation and become part of the workforce. So it really helps to have that built-in renter pool that's there also. And we share that information with how many renters are in the area because we want to really put your property at the top. Your goal is to sell for top dollar fast. So my job is to create a dynamic marketing package and then present it well. I use several of the national listing platforms. I don't want to mention them by name, but you know who they are. They've got free sources that you can look. I don't use Zillow much because that is more designed for residential. I use the commercial listing platforms where I actually subscribe to the service and I pay a premium every month to elevate the listing to a certain level so that it reaches more people across the United States. The other thing that we do is we email blast it out. I send it first to my top 150 because those are my buyers and sellers that transact on a regular basis. And I know who's looking for property. And then we send it out on a regional and national platform. I use a software where it sends it out to 32,000 brokers across the United States, as well as my CCIM connections. I blast it out to all the CCIMs. There's over 9,500 CCIMs nationwide. So it gives me a really healthy network to share your property and make sure that it really is reaching the target audience. The fourth tip to sell your property for top dollar fast is to create competition among buyers. I find that within the first week, the market is going to give a pretty good indicator where the property is priced and if there's interest. Often I'll receive offers within the first few hours. And often the other thing that I'll do is I'll pre-market that property. So I get permission from my seller to start talking to people that I know might either have buyers, other brokers. I reach out to my clients because what I want to do is I want to create competition. So even if I receive an offer before the property goes to the market, I'll tell that buyer and the buyer's agent that we're still going to put it on the market because we want a backup offer. In another podcast, I'm going to talk about due diligence and what goes into the due diligence process. But basically, during due diligence, that property comes off the market and it goes pending, and it gives the buyer an opportunity to do inspections and look at the property. I just had a seller say to me, I want to put this property on the market. They have to buy it as is. I only want to give them 10 days to do inspections. And I said, unfortunately, that's not realistic in the market. it takes time because you've got to line up key professionals, inspectors, as well as then after the inspection, they need time to put together their report and let the buyer review it. And sometimes the buyer has to get additional inspections or have further evaluations done on that. So having a backup offer is really smart. I typically only take one backup offer, but then I keep a running list if somebody has expressed interest. Often the buyer or the buyer's agent will say to me, well, keep me posted if this offer falls apart that you're currently working on for some reason, then call me. We would come back in and make an offer. So I do keep a running list. Most of my transactions close with the first buyer in place, but we have had situations before where maybe the lender has problems and they've changed their mind, interest rates have increased, or the buyer changes their mind because maybe there was too much deferred maintenance that was discovered. So they terminate their transaction and then we go to the next person behind them for the offer. But creating that competition is super smart because the buyer coming in, making the first offer knows they're first to the table. So they're going to have to A, make a strong offer, and B, they're going to have to perform their due diligence fairly quickly. And often I'll tell them if there's a backup buyer behind them, because I want them to know that, yeah, the seller's going to cure safety and habitability issues most likely, but don't ask for the moon just because you came in and maybe made a full price offer. And now you think, oh, well, I wanted to buy it cheaper, so I'm going to ask for a price concession. We don't see that much in our market anymore. It used to be kind of a strategy or a ploy, but sellers got pretty savvy to it. And now they just say, sorry, no, I'm not interested in that price concession that you're asking for. We can terminate or you can close on the transaction. Okay, and the fifth and final suggestion that I would make is have a fast and smooth closing. That's one thing as a listing broker that I love to do is be prepared up front. I also work with several brokers that kind of run with that same mindset. And often what we will do as we are working on a pinpoint price evaluation for a seller, we start to build a due diligence folder in either Dropbox or Google Drive. But what we're doing is we're assembling the rent roll, a copy of all the leases, the last 3 years of the income statements or cash flow statements from the property manager, the last 3 years of your tax returns. Most buyers use financing nowadays to put a transaction together. Every now and then we'll see a cash buyer, but if you're in the $2 to $3 million range or higher, most people like to use other people's money. So they're going to use financing. And the lender wants to see what the seller filed with IRS for both income and expenses. Because what they're looking for there is trends. Expenses stay steady or did they go up or down? And they're looking for trends and patterns. So I'm going to ask up front for your 3 years of tax returns. The other thing that we ask for now is a 5-year loss run report from your insurance company. And what that is we have you call your insurance agent and you ask for a report from your insurance agent on any losses that have occurred in the last 5 years on your property. And the reason that we want that is the new buyer will often have to go out and search and find new insurance. The old days of where you could just call the insurance agent that already had the insurance on the property, that doesn't fit any longer because a lot of the national big companies like State Farm and Farmers, they're no longer loaning on certain properties like older apartment buildings. They just don't have the appetite for it. What I want to do is be prepared up front. I have you get a copy of your loss run report from your insurance broker or insurance agent. And then I have that ready in the due diligence folder. Now, I don't turn everything over until we have an accepted offer because there's no reason to supply a bunch of that information. Yeah, I'll give a rent roll up front when a buyer is trying to decide if they want to make an offer. But I've also done enough detailed information in my marketing package that they can see what the average rents are, and they can see what the average rents are as well as what the rent range is. But once the offer is accepted, then I want to give them full access. And the reason that I want to do that is often a buyer only has 30 days to complete their due diligence. That's calendar days. That's not business days. That blows by so quick, especially if there's a holiday in there or any reason that people would be out of the office. The 30 days goes even quicker. So I want to have my finger on the button. So the minute the offer is accepted, I send all the due diligence information to the buyer's agent, who then shares it with the buyer. And I know that that buyer is going to need that information to do their own due diligence, their own underwriting of the property, as well as share it with their lender. They need to start working on getting property insurance put together. So I want to do that sooner than later because it just makes for a really smooth process. And I think the final point that I would like to share is if someone from a seller's perspective says, well, I know my numbers could be higher, so let's project higher rents. I don't want to do that as a broker. I want to use market data for my cap rates and my sold comparable properties. And I want to use the income that we can document off your rent roll and your cash flow statements from your property manager or from your tax returns. Those are numbers that I'm going to have to defend on your behalf. And sometimes buyers come in and they just want to lowball and offer the lowest and see what they can do to try to kind of steal the property. And I want to defend your number and tell them, sorry, that number's not going to work. We're going to hold out for full price. Here's why. We're confident in our numbers. Sometimes I see brokers who haven't done their homework. Maybe they're unsure about the income that the property would generate or the expenses. Maybe they limp in and they don't put enough expenses on their operating statement, and that property really isn't going to perform that way when the transaction closes. Most buyers are going to either ask for a price concession or they're going to terminate. And then you have to put your property back on the market. And then all of a sudden, buyer's agents who show up want to know what happened. Why did the deal fall apart? Why did the buyers back out? There's just a bunch of questions. And often with confidentiality situations, I don't disclose a lot of information, but if a buyer couldn't put a transaction together, as an example, because of financing, I will share that with the new buyer that's coming in, that's why our transaction fell apart. Often a buyer will have an idea in their mind that they think they can get in with 25 or 30% down. If it's a risky property or it has some risk to it, the lender may want 40 or 50% down, and a buyer may not be prepared for that. So sometimes transactions fall apart, and that's when I would tell a buyer why that property fell out of contract. But if you do your homework going in, most transactions close and it's a smooth process and they close on time. But the key is being prepared up front. So if you're interested in a free report on how to sell your property for top dollar fast, reach out to me on LinkedIn. You can download this free report on my website. Also, don't forget, click the subscribe button and share this if you found this valuable. Feel free to leave us a comment on Spotify or on YouTube. We read every comment and I will personally respond to it. Thank you for listening and happy investing.
That's a wrap on today's episode of Commercial Connections. We hope that you found value in this episode and understand that selling your apartment for top dollar takes strategy, preparation, and excellent marketing. On the next episode, we're diving into Proformas, your financial roadmap for evaluating different properties. We'll break down key components, give you real-life examples, and show you how to use it for better investments. Plus, we'll be adding a free Proforma template in the show notes. Subscribe so you don't miss it, and you can find us on Spotify, YouTube, or LinkedIn. See you next time.